Good afternoon, ladies and gentlemen. This is Nuke coming at you with another episode of Day Trading with Nuke. And tonight, I'm doing my recap of the first trading day of the year, January 2nd, 2019. And while I wasn't able to get in and take any trades this morning, I do want to go through a recap of the tickers I was watching. I called them out this morning, what I looked for, and then I'm just going to give you a quick breakdown of what you could have potentially captured if you were following my system. And if you like it, come on over and join us at TrickTrades. Pat put out a thing earlier about, his education and some of the calls he's made, and I normally don't go over a ton of just, like the technical analysis that I do, at least not here openly, but over inside of TrickTrades and the mentoring, you get that every day. So you get a real in-depth analysis or in-depth look into the analysis that we do and how we do it and why we do it. But today has been one of those picture-perfect days where it's really great to illustrate quickly how the system works. So without further ado, I'm going to swap this over and I'm going to show you what I was looking at and then what I came back to this afternoon and what you could have potentially pulled out of the market had you followed the system. All right, be right back. This right here is going to be my higher dollar screen, and what you will see is that I have Amazon, Tesla, Netflix, NVDA, Apple, Facebook, and Microsoft on here. Out of those 7 tickers, 5 of them fell into the range of what I would have potentially taken good, reliable trades on. We're going to pause and go to the other screen. On this here screen, what you'll see is we have 8 tickers total, and of those we have BA for Boeing, BABA, Caterpillar, BHP, Square, MU, AMD, and VXX. VXX and BHP are 2 tickers that I don't normally trade. So of the 8 you see on this screen, 6 of them I normally trade, and all 6 of these came up with really good price action for the money today. And more importantly than the price action is the reliability of the method of entering and exiting the trades. So we're going to pause this and come right back. Now that we've covered the basics, I'm going to condense the screen so that you can see it a lot more clearly, and we're just going to go through. So Amazon today, you could have captured a total, a potential total, right, of $90.13, and only 3 trades, and all 3 were very reliable in how you enter and exit them. It's a simple strategy, guys. We confirmed we take the 50% between the pre-market low and the pre-market high. This is the 50% area, and we trade that up to the pre-market high. It backs off. When it reclaims it, we enter a trade again, and then we ride this on up just shy by a couple of cents of the pre-market 100% extension. And then we're still shy, but you're setting in a higher low here. So when you get this higher low, anywhere in here that you enter, you're okay. And we ride that back down to the 50% extension to the high side for $18.99. I mean, guys, $90.13 of range on Amazon. That is crazy. Just a couple of shares will make you a killing. All right. This next one is Netflix. Netflix with $11.18 range, right? And what we're looking at here is in the morning, you had the chop going on, right? It tried to break the pre-market lows. It just tested it 2 times, came back up. When it tested it the 3rd time, if you'd have seen that it was setting up with a higher lows here, you recognize maybe you want to take this as a long. Okay, if you was wrong, you should probably have your stop loss set right around here. You're really not going to take that big of a loss anyway. But what are you looking at gaining? $5.58 just from the pre-market low to the 50%. And then it chops around. Yeah, you could have made more, but it tries to go lower than that 50%. The third time it rejects that, you could have took it long anywhere here, right? It didn't really drop down. And then you could have captured another $5.60. I mean, that's crazy. And it's very simple, right? Where do you get out? When it hits the pre-market high. Now that you see what we're doing, guys, we're going to pick up the pace. We got NVDA, average daily range, true range is $8.88. Following the system, you could have pulled off about $5.16 of price action. That's better than 2/3 of the action here. And we didn't even capture everything we could have. This is just basic trades, right? Chops around, you take the 50%, you ride that to the high a day. Get out, wait for the pullback. When it reconfirms that it wants to go higher, jump back in the trade. Pull down another $2.50. Easy peasy. Apple, a good $2.60, solid movement. Average true range on Apple is $6.01. This is 30% of the average range, and you're catching it in one move. And it's dirt simple. 50%, right? So we never hit the pre-market lows again. It comes up, lower high, comes up, hits that 50%, stalls out, consolidates, goes a little higher, retest it. When it breaks, take it long. Ride it up to the pre-market high. Yeah, we could have made some in here, but I'm just showing you the standard issue trading that I look for. $2.60. Facebook, guys, $8.27 of movement, right? And how do you capture that? 2 small moves or 1 big move measured up here, right? And then a third move to the upside. I'm sorry, 3 small moves to the upside or 1 big one. And then 1 move down, right? 50% extensions at a time. Pre-market high to 50% extension. Test it, retraces. When it breaks that again, take it from the 50% to the 100. Get out. Let it play around. Don't get caught in the chop. When it comes back and it retests it and it breaks, take it again. Ride it from the 100% to the 150%. Get out. You'd have captured $6.21. Ride it down from that 150 back down to the 100 for $2 more, right? This thing has an average range of $5.84. We're about 30% or more above that in just a handful of trades. Simple and repeatable. You don't have to take a ton of shares. Just get in it and go. I'm going to throw Microsoft up here for you guys. You can do the math yourself. Look at it. It didn't fit as nice and neat cookie cutter into it, but I mean, by God, it works the same. You would just be taking different levels, but it's very respectable. It's very simple to follow. I just didn't want to show you this one, but you could have made a killing on this one too, right? At least probably $4 or more. You know, let's see. 99 to 101, so that's $2. Yeah, easily maybe $7 on this one. You'd have more than doubled what the average true range was. But I just didn't want to show you this one. Here's Boeing. All right. Average true range of $12.71. We could have captured over $13.50 in only, a few reliable trades. What's that? 3 or 4 reliable trades, right? Pre-market low to the 50, get out. Wait for it to retest. When it breaks that, take it again up to the 100. How far did we miss the 100 by? Only about 20 cents. But where I would have gotten out, I would have lost a grand total of a full $1's worth of movement out of it, right? But when you already captured 3, that's pretty good, $7.25 movement here. And then I didn't even look at the riding it back down, just waited on it to come back up, anticipating this gap here. Yeah, it didn't work out perfect. But there you could have rode up another 316 from the pre-market high back to the 50%. Yeah, we're missing it by 1 fib. 1 fib only, but that's okay. $3.14. Super reliable. Super repeatable. Let's take a look at BABA now, right? Average true range of about $5.70. We could have easily captured over $7, $7.81. By God, that's better than 30% more than the average true range. Simple. It chops around. You could see it setting up higher lows. Take it from the pre-market low to the 50%. All right, let it chop around. Okay, even if you got back in here, okay, you're down 1 fib, whatever. That's what stop losses are for, right? Actually, you're not down a fib. Well, yeah, you would have been. Sorry. But eventually this goes the right way like it should have been, right? But you never broke the trend. Trend is your friend. Get back in again. Take it for another $2, right? You get out. It comes up a little high. Now, this low would have been hard to catch, but you might have had to get it on the second candle. But you could have rode it from the 100% down to the 50 reliably. Get out. Let this stuff go. It comes back up, comes down, comes back up. After a couple of times, you can see the trend developing here, right? From the 50 cent, where are we going? Back up to the 100. Did it get it? No, it fell short by about 47 cents. So what do? We're hoping for the best, but when it comes back down and it comes back up, when we look across here and we see it hitting these flat tops, right? It hit here once, it hit here twice. I'm not waiting on it to break this. I'm getting out while the getting is good. Why? I see it setting in a higher low. I'm trying to get in here, short, get out of my long so I can re-short it. $7.81. That's hella money you could be making. Caterpillar, just, a totally different type of stock. Well, an industrial stock. Around $5 of price action. Pre-market lows. It's chopping around, but you can see it setting in the higher lows, right? Get in. Where do you take it to? The 50%. It pulls back. You could get in it again and then get out at the 100% or the pre-market high. Or you could have just stayed in it for that whole move, $3.29. Yeah, it chops around all day. You could have played this if you wanted to. But I'm just illustrating the point, guys. You see it setting in the lower high here. Take it short. Where are you going to short from? Pre-market high to 50%. Yeah, we're giving up this. I don't care about that. I'm looking for major portions of a move that's reliable, repeatable. $1.65 you squeeze out of it, right? $5 action on 2 or 3 trades. And it's simple. It's the same stuff over and over. By now, you see we're basically working our way from higher price tickers down to lower, but I'm trying to show you that it works across all ranges. I try to stay away from the penny stocks, but I could show you that it works on this too, right? Get out. Yeah, you could have got in here, but we're talking reliable, right? I didn't have enough to really say it was only 3 candles, maybe 4. Yeah, 3 candles, right? No pattern, right? So let it establish itself. It comes up. Let it go. When it bounces below and it starts to come back up to that 50, now I have a reasonable expectation that if it's following other stocks, it's coming up too with the SPY, right? So I get in at the 50, ride it to the 100, get out. Not the 100, the pre-market high. It chops around, comes back up, breaks down, still hasn't broke this trend. Get back in, ride it from the pre-market high to the 50% extension. It starts to set in a higher low or a lower high. You could ride this thing down. I didn't even measure that one. Waited till it hit the 100% or the pre-market high, captured it here. That's another $1.19. So $3.59 range total on a $60 stock that normally only moves $4. We captured almost all of the average true range. And if we just shorted this down, we could have increased this by $1.19, give or take a few cents. Repeatable, easy, right? MU, probably my worst performer for the day. Comes up, you miss it, it pulls back. I didn't get, But look here, your pre-market high. You could have got in here. You had 3 candles. That's 3 minutes to make your mind up. And if it's following the rest of the market, go with it. Comes up, pulls back a little bit, but where does it come to? The 50%. It pulls up a little bit more, comes back down. Stops on the penny. Bounces from there. Take it again to the pre-market or the 100% extension to the upside. Right? Get out. Save that capital. When it retests and it's starting to set in these lower highs, short the damn thing. Did it miss our 50%? Yeah. How much? By 22 cents. That's not really a huge miss. And if you figure what it ended up going to here above, it balances itself out if you'd have taken this thing back the other direction, because that would have been the same as taking it from here back to this line, right? But $1.46, you can't complain about that. And the last one of the day is going to be my devil darling with AMD. $4.87, a price grab you could have grabbed with 4 or 5 reliable trades. Where to? It comes up, it chops around. Yeah, it's a risk, but all trading's a risk. That's what the hell your stop loss is for. So you take the probability everything else is going up. If you wanted to take it and go up, great, you'd have made out like a bandit. If you tried to short it down, that's what your stop loss is for. Being wrong. We're all going to be wrong, right? We just need to take the highest probability. So what do? 50% to the pre-market high. You don't even need to get out here because it blew clean through it. But if you got out, got right back in, no harm, no foul, where does it stop at? 50% extension to the high side. Get out. It comes down, it retests, it sets in a lower high, short it back down. Where does it come to? Within, well, no, to the penny, it comes down to the pre-market high. Get out. Comes back up. Doesn't go through that fib. Comes back down. Comes back up. Sets in a higher low, even though it's shallow and even though it was quick. Maybe you missed it by a couple of cents and you get in here. 3 minutes later, wait a damn minute or two. It's okay. What do you grab? Another 36 cents. 36 cents might not be impressive, but when you put 36, 36, 36, 36, you know, you're talking 72 cents twice. That's what, $1.44 on a $19 or less stock, and then another 20 cents at the end of the day. You know, how much is we off? Yeah, we're off by 12 cents. What happens? You short it from the 50% extension, trying to come back down to the 100, and you see it didn't go. It starts to set in these higher lows again, right? Don't let it go against you. Get out. Change your stop loss. Take what you can. All right, guys and gals, I think I'm right at about 13, almost 14-minute mark, so I'm going to wrap this up so I can get it out to you in 15 minutes or less. But the bottom line is, right, I've got a methodology that I use, and it might be different than what you see from a lot of people, but I do it every damn day. And those of you that have traded with me for a couple of weeks, couple of months, a year, you'll know my methodology doesn't change much, right? I keep it, it looks complicated as hell, but I keep it really simple, right? And I'm hoping that by me stripping some of the stuff away, when you see it on your end, and now that I'm able to record it with the new software and everything's in a little bit higher definition, it's able to come through a lot more clear. I'm hoping that you have a better appreciation for that and can really see how some of this stuff really pops out at you, right? Because I took some of my other stuff here off, but I don't really use that many indicators. A lot of people think I have a lot of indicators. Truth is, a lot of it is there, but it's the same tool, right? It really, you're not swapping to a different concept. You're just hash marks on a chart. Anywho, I hope you like it. And guys, if you don't know what you're missing, if you're not over here with us, right? Come on over, join TrickTrades. Go to the description down below. There's a link to it. But get on over here, guys. See what you're missing. You know, and there's a lot of negativity in the trading world, and a lot of people are bashing on Pat. You know, there's always somebody coming up. You know, people pay money to join a room, and then they don't think they got a good deal, or somebody's trash talking. It's just the nature of the business, guys. But I'm here to tell you, you're seeing the calls, you're seeing the repeatability. You think what I'm doing is solid? Come on over and see what the other guys are doing here at TrickTrades, right? We all got a different system. You got about 6 or 7 moderators. You got a owner who's there all the time. You know, come and give it a shot. If you don't like it, then leave. Nobody's going to hold you to it, you know. But you owe it to yourself. You know, take a shot. Try it. Try it for a month. See, you know. How much could you learn? You know, what was your learning curve like before you found the group that you're in now? Or maybe you haven't had a group, right? And you've just been winging it from YouTube videos. Come and join a dedicated group with a bunch of guys like me who are here spending, you know, the majority of their day every day to answer questions and help you out. All right, guys, that's all I got for you. I'll see you tomorrow. Hopefully it's going to be a great day there too.